The broadcast is now starting. All attendees are in listen-only mode.
Hi everyone, welcome to the Ablesys webinar. Ron here, and we'll go over the charts and show you the results from today from the intraday trading. It was a fantastic day using AbleTrend signals today on the E-minis. It was just an unbelievably profitable day. In fact, on the mini NASDAQ, it was 120 points profit. Just the normal stock market hours, 6.5 hours, from 9:30 to 4 o'clock Eastern Time, just your normal U.S. session, no overnight or early morning or anything like that. It was about 7 or 8 trades, and it was just an unbelievable day. I mean, that just trading one contract, that's over $2,000. And that's including being generous for commissions and slippage and everything else. So it was another real good day today. We'll take a look at all the different signals because the software doesn't just trade E-mini's good, or I mean, it works just as well, exactly the same for longer term stock trades or swing trading, options, Forex, currencies, other markets in the futures market. Doesn't matter. It's completely, it works exactly the same for everything. Doesn't matter one bit. So it just depends on whatever you like to trade. It's where everybody around the world likes it for different markets. And real popular in the U.S., of course, to day trade E-minis. So let's jump in and take a look. I've got the Walmart chart up here. We showed this a couple of weeks ago. We had a nice buy signal on it right there. This is 2 time frames combined into one chart. This is a daily, weekly combination. We've got both time frames in the one chart. That's what makes it work so well, why it's so different than everything else. Of course, blue bars means to buy it. Green just means sideways, and red means downtrend. We're going to sell it. What's really, or most important, are the dots. The little blue dots block the prices from going lower. That's the hidden support on the daily chart that our algorithm can see for us. So that's a big advantage, knowing where these roadblocks are. The red dots is the opposite. It's the hidden resistance that is above the price that's going to block it from going higher, like it did 5 times there, like it did here. And we started those red dots about 15 days before that even happened, and it told us there was going to be some resistance above. You're in a downtrend when you have the small red dots. You're in an uptrend when you have the small blue dots. Simple enough. The big dots is the weekly hidden support that we've added to the market. You can see over here, these dots came in months ago, stayed at the exact same price, and 5, 6, 7 times the prices came right down to the blue dots and stopped. Just amazing how accurate it can be at times. This is a classic no trade zone. You've got red dots above, you've got blue dots below. We call that a no trade zone. The software is not only going to tell us when to get in and when to get out, it's going to tell us when not to trade at all. It's going to tell us when to just stay away. It's too risky. First and foremost, we don't want anybody to lose any money. Of course not. I'll guarantee you there'll be some losing trades, but what's most important is don't lose. That's number one. Secondly, we want to win. You'll only get low risk trades with AbleTrend. That's why it works so well all these years. A really nice buy signal came in right here about 2 weeks ago at 97 and change. You're at 103 and change of $6. Option traders are loving that signal right there. That's a lot of money right there. Now you say, where do I have my stop loss? Well, how do I get out? What are the exit rules? It's very clear what the entry rules are. Blue bars and blue dots we buy. Red bars and red dots we sell. There was sell short, which was no signal on this chart. This is a no trade zone because of the blue dot below. Red dots above, same thing here. No sell signal here because of the blue dot. The dot only comes in once a week. So you're not going to get a dot under every bar because they come in every day. The dot, big dot is there. It's good for 1 week into the future on this daily, weekly stock chart. Stop loss will be right there. Second, there's the first blue dot under the price. There's the second or previous lower blue dot under the price. Second step down. Here's the price. There's the blue dot under it, protecting our money, blocking it from going lower, telling us we're in an uptrend, and there's support below the price. We have double support below this price. You've got the small dot and the big blue dot. The more blue, the more odds in your favor. The more red, the more odds it's going to go down. The more blue, the more odds it's going to go up. We jump all over that. That's a super low risk, high profit potential trade. Stop loss always goes on the previous lower small blue dot below the price. Second lower blue dot, not the first one under the price, the next step down, the previous lower dot from usually, a couple days ago. But you can see, looks like steps. There's one dot there, three here, three there, one down, two down, simple stuff. And the way you read this chart with the colors and the dots, it's the same way you read any chart. So now you can read any able trend chart. You know exactly where to buy, sell, where to put your stop loss, and when not to trade at all. The no trade zones that everybody loves so much. It's that easy. And we'll help you with that too. I'll gladly do a live one-on-one trading session with anyone who gets a 1-month trial. Happy to help. Okay. If you like crude oil, again, I'm just picking some markets out here. Yeah, looks great. Great day today. There's a perfect buy signal. There's a sweet spot. There's a perfect buy signal. Blue bar, blue dot. We even have a blue arrow. The arrows are an added indicator, which we call trend sig. It's a fourth indicator that we've added to the chart. Very simply, you just want to see everything blue. Any blue or red, like right here, that's a no trade zone. That's a software telling you it's going to go sideways. Don't do anything. Leave it alone. It's too risky. We don't want any high risk trades. We don't want you to lose, and just like we don't want ourselves to lose. A beautiful buy signal there, and then we're stopped out right there. It goes under the blue dot to the previous lower blue dots. But that's a really nice trade right there. Yeah, you're looking at 60 cents. That's $600 just for one contract. No trade zone here, no trade zone there, bunch of no trade zones. Now, this is a losing trade. Got to point that out. Got to be fair about it. You got everything lined up there. We lost 10 cents on that, 15. Let's call it 15. It's only 10. Let's call it 15 cents on that trade. I like to exaggerate the losses. We got a 60-cent winner, a break even, and we got about a 15-cent loser. And this is a small winner here because that's an obvious buy signal, and we're out over here. There's only two ways to get out. An opposite colored bar, meaning if you're on a long signal, if it goes to red, because red and blue are opposites, then we exit. Or if it goes under the blue dot, we get stopped out. Okay, now let's look at that. Take a quick look at this really profitable mini NASDAQ chart today. Again, 120 points profit using Able Trend signal today. I'll even just take 20 points off for slippage and commissions, which is $400. That's ridiculous. It would probably be more like $100. But again, I like to exaggerate the losses. Be extra fair about it. That's a $2,000 day. Just trading one lot. Okay, we got a right at the open over here, the 9:30 New York Open. We've got a screaming buy signal that just shot up about 60 points on the first trade of the day. It just we got the heads up pre-market, and then up and away it goes. And then we're out over here on the red bar, red dot. That was just a killer trade right there. No trade zone here. This is also not a trade. You say, why not? You got a blue bar, a blue dot, blue X. I just used X's on this chart. Some people use X's. So I just changed the big dots to X's. That's all it is. Now, why isn't that a trade? Because the price was 20 points away from the blue dot. We used the 10, and we've now upped that to the 12-point rule because of the extra volatility. We've got to get in some trades. If it's more than 12 points away from the blue dot, again, the closing price of the big blue dot, of the big blue bar to the little blue dot below, and all you have to do is just real simple with the crosshairs. It was too far away. Okay, it was about 17 points away. We just don't take a trade like that because our stop loss has to go even lower than that. We're not going to trade with a 20-point stop loss. That's a $400 stop loss. That's just too much risk. We won't take it. We'll be patient and wait for the next trade. Plenty of trains leaving the station all day long. Perfect. And that same reason we don't take this trade, because the close of that bar was about 20 points away. However, this is what we define as a sweet spot. This is beautiful. This is super low risk with a fantastic risk-reward ratio. You've got red bar, red dot, red X. Here's another key. You've even got a red arrow. There was the last arrow given. It was red. That's a sweet spot because it goes green bars up to the red dot, bounces off of it, and goes back to red again. Down we go. Yeah, that's okay. all the bars were right at the, actually the first bar at the open, Skip, was definitely valid trade. Especially at the open, you can take those trades. I mean, because the open, you're going to get a flood of volume. So if you're near the bands, jump right in. As long as you're within the 10-point rule, perfect, a 12-point rule on NQ, use 4 points for ES, perfectly fine to jump in on that because it's going to, you just get such a flood of volume in. But there's a really nice sweet spot, really nice. And that went down very nicely till we got stopped out. Right there, we actually stopped out. These red dots are slightly higher. And that was about a 20-point, let's call it 15. It was a little more, but let's call it a 15-point winner right there. Nothing but red bars, red dots, red X's. The software is screaming at us to get in at that point. Here's a little extra something. I'm definitely going to go over it more closely in the advanced webinar. But I want to show you something actually on here. Well, obvious no trade zone. Let me go through it. No trade zone. That's about let's call it a small loss. It's about a break even. Let's call it a 5-point loser. Again, I like to exaggerate the losers. No trade zone here. Not touching these bars. They're way above the upper bands, and they're more than 10 points from the bounce anyhow. There's where we can get in. About a break-even trade because we're stopped out. If you trade multiple contracts, as most people do who use AbleTrend, take profit when the prices hit the upper bands when you're long. Take profit when the prices hit the lower bands when you're short. Obvious no trade zone there. Now, this is interesting. Is it 10, 12 points? Let's see, 7,091. Yes, that's a losing trade right there. Yep, lost 10 points on that trade. We're up about, I don't know, 56, let's say 50 points, 10-point loss there, a break even, no trade zone, and then another fantastic trade right here. Really low risk, only 5 points away from the red dots. Super low risk trades. Even if we lose, we've got a stop loss like 6 points away. So very little bit of money at risk. And look how that one did. Wow, that was a home run. Stop out here or on the big blue dot. Either way, same thing. And that was a really nice trade. That was 35 points profit on top of the 40 points or so, 40 or 50 that we were winning. Now you're up to like 75 points profit. I mean, it was just one of those beautiful days. Now, here's what I want to show you. This is more than 10 points, actually 12 points away from the red dots. However, and I'm going to go over this more closely. I'm going to go over this more closely in the advanced webinar this time on Thursday. You see how the last arrow given, this is the new trend sig indicator we've added to the chart. You see how the last arrow was blue? I'm not going to take this signal until I get a red arrow. In other words, you don't want to go against the last trend sig signal. You don't want to go against the last trend sig signal. Even if it was 20 bars ago, and this one was about 10 bars ago, you're still, according to the trend sig indicator, you're still in an uptrend at that point. So even though we've got the red bar and the red dot and the red X, we're going to let that one go. We're going to filter out what turned out to be a false signal. That's the way we, besides the no trade zones, which work fantastic to keep our risk down much lower than, that's why we get so many less losing trades with AbleTrend than everything else. We're also going to take a look at this arrow. It's been very helpful just to make sure that we don't get in if you have an opposite arrow, the last arrow that was given on the chart. Okay, then we have a perfect 4 indicators telling us to go long. Blue bar, blue dot, blue arrow, blue X. Boy, you can't get any lower risk than that. It just doesn't get any better than that. And then we're stopped out here. Made a couple points, but I'll call that a break even. And then we had, again, 4 indicators, blue bar, blue dot, blue X, and a blue arrow a couple bars before that, which is still valid. And then that one shot up right into this 4 o'clock New York close. And we picked up another 25 points into the close. So that's where you got to about 120 points profit. It was kind of nuts. And if you just picked up, half of that or 3/4 of that, I mean, that's a great day because it cleans up a lot of days they're going to be losing trades. And I'll guarantee you they'll be losing trades. Guarantee you. They'll be losing trades and they'll be losing days. They'll be small. Nobody's going to get beat up because, as you can see, we've got stop losses in place. And the blue turns quick enough to red or back to blue again. However, it will still be losing days. But over the year, it's been fantastic. Over the last 2 weeks, it's over 8,000 profit. Again, if you just took just the same rules I'm going by, took all the trades. Now, nobody's going to nail it perfect. So, you're not going to get everything right. The system, the software, of course, has no emotion, and you and I, all of us have emotions, and we might not be in front of the computer all day long. However, there's a lot of money to be made using the signals, a lot of money, just trading one contract. And we recommend not trading between 12:30 and 2 o'clock Eastern. I mean, you can if you like, but we went back 1,000 trades, and it was just break-even Able Trend signals between 12:30 and 2 o'clock. It was just a break-even, so there really was no advantage. Now, some days they were great, some days it wasn't. But on the long run, over a year's worth of signals, you broke even between 12:30 and 2. Between 9:30 and 12:30 Eastern Time, 65% of your profits. The other 35% of your profits came between 2:30 and 4, the last 90 minutes of the trading session. So interesting stuff. Jesse did a very in-depth study. I thought that was great. Kyle says, thoughts on using the NQ35 daily chart with current volatility. I don't know what that means. What do you mean the 35 daily? Kyle, you got me a little confused on that. 3 5-minute chart? I've never even tried that. No, I wouldn't suggest that. 1 minute, 3 minute has just been incredible. I wouldn't do anything but 1 minute, 3 minute. I mean, it just couldn't be any better. I don't know when anybody could want more than that. 1 minute, 3 minute is what we've been focusing on every day since the 1st of January. I mean, you could look at the 3-9 if you like that better. That's fine, absolutely. You could trade anything you like, any time frames, any markets, but there's just nothing better than the 1-3. It's outstanding. I mean, Jesse's got the results of every single trade. It goes week by week, and the last 2 weeks of trading is plus $8,400. Just trading one contract between 9:30 and 4 o'clock, the normal U.S. session. Again, you can use anything you like. I mean, a 3-9 will be fine, but in this fast-moving, volatile market, I think it would be a little too slow. But, everything's fine. Everybody's different. There's no right or wrong. When you set up the trend sig to use the lower, higher time frame, Kyle, always goes on the 3-minute chart, the higher time frame. On a 1 minute 3, goes on the 3. On a 3-9, it would go on the 9. Yes, always on the higher time frame. Good job. Good question. Oh, glad to help anytime. You're one of the good guys. Okay, I hope this was helpful. Let me know if I can help. I'm here every day. I'm always glad to help. You'll get great support from myself and tech support and everybody here. Just have the patience to wait for the trades, have the discipline to take the trades, and you've got a chance to do very well. It's been working well for so long, consistently. And I don't know what more anybody could possibly want, given the kind of results that have been, on a daily basis, just in the past year alone. However, anything I can do to help, let me know. Have a good night, everyone.